How to trade Bitcoin easy tutorial for beginners. Hey guys, welcome back to the YouTube channel. Today we will be taking a look at how you can trade Bitcoin. So let's get into it. Now, the first thing you're going to do is head on over to your Binance account. If you don't have one already, all you need to do is to register via your email, provide identity verification, and then your Binance account would be created. And now we're going to move on to the most important part, which is trading Bitcoin. How do you trade? Because trading can seem so confusing. Well, the first thing you're going to do is you're going to go into your wallet and you're going to deposit fiat or funds into your account. So you're going to click on spot and fiat and click on deposit, and then you can deposit USD into your Binance account. Once you have done that, you're going to go on ahead and click on trade, click on Binance convert, and change that token into BTC or any other token of your choice like USDT, whatever token that you want to be using with Binance. So it's usually going to be BNB or USDT, whatever token that you prefer. Once you have done that, you can go on to trade over here, click on spot trade. So we're going to get started with spot trade. Now, what is spot trading? Spot trading is basically when you are trading at a certain price, you're buying and selling. So first off, you can see as I open up the spot trading chart, this is the BTC/USD chart. And the first thing you're going to do whenever you're trading is to choose the token of your choice. So on my top right over here, you have this search bar, and I'm going to search for BTC, and you're going to find multiple different token pairs available for BTC. So you can see over here that you have things like BTC/BUSD/USDT/USDT, BTC/Ethereum. So there are multiple different options for you to be able to choose from. We're going to go with the most standard trading option, which is BTC/USDT. And once you open up that chart, this is what the chart is looking like. Now, you might be all confused on how do I read this chart? I don't know what it means. Well, first off, get started from the top. You can see this is the current price of BTC. It's around 23,198 or 200. So this is what the current fluctuating price is like. You can see the 24-hour change. So currently the price of BTC is varying by 0.70% in the past 24 hours. The past 24-hour high was at 23,349 USDT, and the low was at 22664. So you can see you're going to get the highs, lows, and the overall price information from the top line of your trading chart. Now you can see over here, this is the market price that you can see the time that you want the chart to illustrate. So I have selected 1 day, and this is the graph for 1 day, and you can see over here that this was the opening price. So the opening price was 22,800 and something, and then the highest price was this. You can see this is the highest point in our chart, which was at the highest price you can see, which was 23,389 USDT. And then these are the lowest prices, and these yellow, blue, and orange lines are illustrating previous patterns. So you can see the overarching price range or price variability of the crypto token. Now, you can see on the total right bottom, you have the overall market trades that are happening, and on the left side of your screen, the red illustrations or prices illustrate the price at which people are selling BTC, and the bottom green illustrations are the open offers. So these are the prices people are looking to buy BTC at. Now, how can you purchase BTC from over here? Well, the simplest way is to scroll down over here, select spot trading, and select the price that you want to buy BTC at. So let's say the current price is 23182, and I want to buy it at 23179. And let's say the amount of BTC I want to buy is 1, and this is going to show me the total amount of USDT that would cost me, and then I would just click on buy BTC, and this would open up a open order in the marketplace. So in this way, whenever the price reaches that amount, I would get my BTC. You can also do leverage trading and other kinds of trading as well, and I'm going to show you guys exactly how to do that. But you can see in this way you can add a certain limit spot trade, and you can also do limit spot pricing. So what you can do is you can go on ahead, and let's say when the price increases to $5 more, so the current price is 8.2, and when the price is 8.7, I can put in a sell order, and I choose to sell 1 BTC when the price reaches 8.2, and that is another way that you can automate this process and earn profit simply by just spot trading, and this will help you. This is like the most regular form of trading in cryptocurrency. Now, you also have things like cross 3x and isolated 3x. Now, This is where it gets a bit more complicated. Now, you have basic cross 3x's where you can do pretty much the same thing with 3 times the collateral, and you can go on ahead and click on borrow over here, and you would be borrowing money, and then you can also choose to repay BTC as well. So in this way, you would be borrowing money from other traders or borrowing money from the Binance liquidity pool, and then you would have to retrade, and if the trade goes correctly, then you just can repay them however you like. Now, if the trade goes incorrectly, then the funds within your spot trading account would be liquidated. And you can do this cross 3x or isolated 3x. Now, this is going to be a high risk and I wouldn't recommend it. Instead of isolated 3x, I would recommend that you go on ahead into your Binance trading section, and we're going to go into the second most popular way to trade Bitcoin, which is futures trading. So what you're going to do is you're going to go into derivatives on the top, and then you're going to click on USDM futures. And this would open up the futures trading chart on Binance. Now, what is futures trading? Futures trading is different from regular trading. Futures trading is basically you are going to be betting on the future price of Bitcoin. So over here we have BTC/USD selected. You can change this into any token of your choice. Now, what you would be doing is, let's say I expect the price of BTC to go up from here. I think the price has gone down enough and now it's going to go up. So what I would be doing is I would be buying or longing BTC. I'm not going to be actually holding any BTC. Even when you are buying in the futures market, you're not actually buying. You're just betting on the price of that token. That is going to be your bet. And if you're selling or shorting, you're not selling or shorting, you're actually betting that the price would go down. So that would mean you're shorting that. So you're going to add your stop price. If you're buying long, then the stop price would be higher than the current price. If you're selling or shorting it, then you would be entering a lower price than the current price. And then you're going to be entering the last price you would want to take, and then the size of BTC, so however much BTC that you want. Now, the super risky part about this is that you actually have leverage over here. So what is leverage? Now, leverage is, let's say I expect the price of BTC to go down from here, so I'm going to short it. And the price that I expect it to go down to is 22,000. And now after that, what I'm going to do is I'm going to add the size, which would be 2 BTC. Now, which is 1 BTC. Now, let's say I have these funds in my USDT account. So let's say I have these funds in my USDT account. Now what I can do is, just by moving this by 2%, this would actually mean that I'm betting 2 times the amount that I just put in. So this would give me leverage. This is actually going to enable me to trade in a volume that I don't have. So I would basically be betting on more money than I actually have. And then if my bet goes correctly, I would end up just repaying my debt and getting the profit plus the initial investment that I put in. If my trade goes incorrectly, then I would actually be getting liquidated. So any money that is present in my futures wallet, not in the spot wallet. The money present in your futures wallet is going to be separated from your spot wallet, and the money present in my futures wallet would be liquidated. So I would be liquidated, and that is the risk of futures trading. So that is why it's best to keep a futures trading leverage at a low, like a 2%. So if I am betting on 2 BTC over here, like so, and then I can put in leverage as well. And now after that, you also have take profit and stop loss. So let's say that I was shorting BTC, so I expected the price to go down. Now let's say the price goes down to 22,000, and I want to just take all my profit as soon as the price hits 22,500. But if, let's say, the price goes up instead, so my trade is not going the way that I expected to, and I want to stop my losses, so I can input a stop loss function, which would mean that, let's say the price is going up from 23,000, which is the current price, and I just want to stop losses at as soon as the price goes to 23,700. So if the price increases by 700 USDT, then I just want to stop my losses and sell the remaining amount of BTC that I have in this trade. So that was it for today. I hope you guys found this video helpful and you're now better able to understand Binance and how to trade Bitcoin on Binance. Make sure to leave a like and subscribe to the YouTube channel. And if you have any questions or queries, leave them in the comment box down below, and I will catch you guys in the next video.